The U.S. economy is certainly giving off a lot of mixed signals right now. On one hand, there's a banking crisis that has the markets teetering, but there's also some positive signs as well. I spoke to Max Wolf, an economist here in New York City, to try to make sense of it all.
Most Americans are nervous, some are really suffering, and no one really knows exactly what's going on.
Inflation was a big deal last year, where it reached over 9% in June. In response, the Federal Reserve raised interest rates, and it did the job, bringing inflation down to about 6% where it is today. But that's still high because most economists say the target is around 1 to 2%.
Inflation will be less of a problem going forward, but we have a lot of instability risk around the global supply chain and around the conflict in Russia and Ukraine.
Higher interest rates might have helped slow inflation, but it's also had a negative effect on the housing market. That's because interest rates during the pandemic were down to historic lows of about 2%. Today, they're up to about 7%.
But I think the housing market's best days for a while are probably in the rearview mirror, not the windshield.
And Americans are working. The U.S. added over 500,000 jobs just in January and over 300,000 in February. The unemployment rate of 3.4% was the lowest since 1969. And since Americans are working, they're also spending money at a record pace as well. So what are we to make of all these conflicting signs from this economy?
Every time we see a piece of data, we have to try to figure out if this is the new normal usual or abnormal. And that's usually how we look at things in economics. Is this the beginning of something new, the end of something old, or something we haven't seen before?
The confounding U.S. economy certainly giving off mixed signals everywhere.